It makes no sense to me because his justification has always been more in the financial stability arena, and he's been concentrating a lot less on the macroeconomic data, at least in his public statements. I don't see commercial real estate as being any less frothy than it was before.
Steve? Brian, I'm happy to offer you a reason for that, which is that I think a lot of Fed officials felt like even if it's time to raise rates, doing so 10 days or what is it, 6 days now before the election might not be the right time to do it. My best guess is Eric Rosengren would have backed off for that reason and was perhaps happy with the language. The language bought him off in a sense. So, you know, if you're going to really do this, if you're really going to do this next month, then go ahead. I'm with you on the
Diane?
on this.
Yeah, no, I want to underscore that. I mean, the language was a little more, you know, we're moving, we're inching, we're getting there, leaving optionality completely open, not repeating a year ago. But that little bit of a more move was just enough to take him off the fence and get him off that dissent. And I do think this is a unique election here.
Yeah, I mean,
and there's so many accusations of interference. The Fed wanted this to be a non-issue.
How about the fact that they've upgraded their expectations on inflation? That's their core mission,
to me,
right?
If there was one placating factor for Rosengren, it would have been that they removed the sentence in front of it, and now they fully expect to see inflation rise to that 2% level.
But you know,
by the way,
Rosengren's concern is about the excesses that are building up in lending markets, specifically commercial real estate, and now we're starting to see it in corporate debt.
But here's the risk. Let's forget about the bird analogy, okay, and go to a reptile analogy. Tortoise. Right. That is a reptile, right? Turtle's an amphibian. All right. Because we know the parable that the tortoise wins the race. Right. In this case, the Fed is definitely a tortoise. Is there a risk that before the tortoise can get to the finish line, it's going to get run over by the steaming tractor-trailer truck of inflation? Because if inflation does pick up at this level, Scott, do you think they've got the policy tools and the guts or the will to stem it?
Well, to be honest, if inflation picked up to, let's say, 2.25% or 2.5%, I think that Janet Yellen would argue that in the high-pressure economy that she's advocating, that we should live with it for a while and let employment continue to fall.
Go back to John Williams' paper, who, by the way, was under Janet Yellen at the San Francisco Fed, and the seminal paper that he came out with a few months ago that said we need a higher inflation target. So,
Steve, what do you think?
Out there.
We're starting to see that
so
move.
I think
it
this
is a division in the
part
Fed
of the part of the upside-down world we live in here is one where normally, when a Fed says that inflation is on the rise, that would be a time to run for the hills and to be very concerned. In this particular world we live in, where the Fed has been striving almost unsuccessfully to create inflation near 2%, this is sort of a sign of confidence and a sign that things are kind of going the way they want them to go. So I don't think I would fear this level. I think what Scott said is right, is that Yellen would be happy to live with this 2.25%, 2.5% relative inflation. And Scott, tell me if I'm wrong, but the market will dictate how fast the Fed has to move on this. If the market gets very concerned and starts pricing in ever escalating inflation, the Fed will have to act. The problem has never been that the Fed lacks the tools to solve the inflation problem. It's been that it lacks the tools to fight the deflation concerns.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the I right here to watch the latest from CNBC. Thanks for watching.